What is the number one reason many new option traders fail? Well, I'll share with you some insight here over the last decade of things I've seen when I've done coaching sessions. People call me for a quick 20-minute call. They give me some insight on what they're doing, and they're like, I just can't figure it out. Why is my options trading not working? So over the years, I've done a lot of one-on-one sessions, and I've seen what people are doing. It really gives me an insight into their portfolios, and seeing a lot of different accounts, I see a lot of different things. So with that in mind, I'll share with you some tidbits and insights behind this regarding what I think is the number one reason why many people fail with options trading, especially if they're new and beginners. Now, if you're brand new here, I'm Sasha, the options coach, and well, I've coached a lot of people when it comes to trading options. So one of the biggest things when it comes to options trading that I've seen is that a lot of people put on single option trades, meaning they're buying a single call or buying a single put. Now, that's fine in some cases, but you got to be smart about it in the case of doing it and how to do it. And I'll show you that more towards the end of the video of how you might construct a single option contract, at least more of an advanced or professional level. But if you're brand new here, listen up. Here's kind of the approach that I see a lot of people doing. So if they're going in and they're interested in getting IBM, so let's say we want to buy a option contract on IBM, or we're interested in trading options, many people, what they're doing is they're going in and let's say they want to buy a call or they buy a put, depending on the direction. Now you might go 36 days out, you might go out 8 days. So depending on where you're at, you might choose a certain duration on that. Now, if you go to an 8-day, you're being even more aggressive because a shorter duration doesn't give the stock a chance to move. Now, the biggest problem here is really you get this negative theta. Negative theta means you're burning through time decay. And then what you also have over here is this one where it's a little bit of a longer dated. So this one is May 23rd. And by the time you see this video, it's going to be a lot later. But the point is that one, we've got kind of like an 8-day or maybe a 36-day. And that one still burns $16 of theta. Now, what does that mean? Burning theta means that when you go in and you actually structure this trade, what's happening is that when you are a buyer of this, every single day you're losing $65. Then it's maybe $68. Then it's maybe $70. Then it's maybe $75. That accelerates, meaning your loss is accelerating on the value of that option. It means that stock needs to move, and it needs to move fast in your direction of your choice because you're burning through time. You basically have an insurance premium that you've purchased and you're burning through time. And this is one of the biggest mistakes I see day in and day out, that people are losing money on this theta problem. So anyways, watch out for one of these things. Another big issue is that many people go in more along the out of the money area, which really accelerates the chance of probability of even success or winning on those spreads because, well, now your chance of winning those is much smaller. So anyway, what I want to show you here is if we actually take one of those spreads that we have, and let's say we go in for this call, and instead of doing something that's only buying a single, we could go out and buy that same single. But what I'm going to do is hold the control key here and sell something above it. Now, what this does is create a vertical spread, but I want you to watch very closely on what happens to the theta right there. It's almost non-existent. It's almost zero. So take, for example, let's just buy this single on its own just to show you here what's happening. And then we'll sell this single on its own. And here we go. And what we're doing here is constructing this vertical spread. Now, this is not as efficient, so you'll see it's starting at a negative because it's not constructed as a vertical. But if I don't have this one that I'm selling, I'm burning through $16 of theta in this case. But once I add that one that I'm selling above it, which cuts down the risk, it gives me theta or negative decay. See, the one that I'm selling right here is giving me $16 of theta. The one that I'm buying is losing about $16 of theta. And the difference between both of those, I pretty much am getting almost a neutral theta. And that is a huge win. That is fantastic for when you're a new options trader. Now, this trade and this strategy is obviously more complicated than buying a single call or put. This is why it took us 3 days to get through the workshop here and class that we just did for our members. So if you're interested in some of the classes, or you're interested in kind of doing vertical spreads, just let me know. Shoot me a message. Go to our website and at optionsblackbelt.com and let me know, and we can hook you up with some more knowledge and insight on some of these classes. Anyways, The point here is when you construct a vertical spread, you've got a little bit of a tiny, tiny, tiny negative theta right now. Now, if it continues to go towards expiration, obviously that theta negative could accelerate, but at least you're starting out with almost a zero theta. And this is one nice way of doing it. So anywho, that is the more appropriate way of going in and starting to look at options, is rather than allowing theta or time decay working against you, you're going to go out and you could create a vertical spread, and now theta doesn't really hurt you that much. But you might be saying, hey, well, what about buying a single? I get unlimited upside. Well, how would you do something like that? Now, I don't want to limit my upside, because when you do a vertical, you actually are constructing a vertical here. And when you do something like this, you are limiting your upside. It is true, because the amount at risk here is 238, but the amount of reward is 262. So you are limiting your upside. I totally get it. So how do we go in and actually fine tune this to being and reacting more like the single here that we have, where we have a really amazing unlimited gain? How do we do that? Well, we could do something that's more like a selling verticals against it. So if we bought the single there, we could sell verticals right here. Let's go, in this case, selling some premium, where if we sell these additional verticals out of the money and get some time decay, positive theta, we could structure some of that. Let's say we go 10 contracts, and I will go to 1 expiration, combining that with the single. So look, the single on its own is a negative 16 theta. Right? So we see that right there, negative 16 theta. But if we add the vertical, that gives us a positive, well, we get a positive 31. Now we could go down a little bit. There we go. We get a 18 theta. So combining these two together, I get my explosive move right here. And I like to call this the rocket strategy. I get this explosive move without any theta, because we did the, I had to figure out what to name it. So we did this class not too long ago as well. So also in there, the rocket strategy concept. My point here is that now we can negate some theta. All right, so I hope that gives you a little more insight and details on how to structure these trades, and really one of the bigger reasons and issues that people have when it comes to setting up these trades. Because if you do a vertical, you don't have a lot of theta in there. But the minute you go into a single, you got a negative theta, and it's a problem. So what we can do is actually use out of the money vertical spreads to finance or kind of cut the theta and neutralize that theta a bit to get an explosive, powerful move to the upside. Anyways, hope that helps, gives you a little insight. If you're interested in some of the classes we do, just let me know. Shoot me a message. Go to our website. We did selling verticals not too long ago. We did the at the money verticals here this week. And yeah, if you're interested in the classes, check out our website, send a live chat, book a call, and be happy to hook you up and show you what we have. Anyways, thanks for joining me. Looking forward to talking to you. Keep watching some more great videos for some more insight. See ya.